Talk to the founder of a tech startup about their biggest growth challenge, and they're likely to talk about money. The shortage of money for investment can slow down their ability to rapidly scale and compete on a global basis. What if there was a made in Canada idea that could unleash hundreds of millions of dollars of private money to invest in startups? In today's show, we talk about a potential game changer in tech investment. Keep watching for more in this episode of Techopia Live. Hey, everybody, I'm Michael Curran from the Ottawa Business Journal. Welcome to Techopia Live. This is a podcast from OBJ that features interviews with executives from next generation technology companies, as well as leaders from Ottawa's technology ecosystem. Our mission is to share knowledge and create a deeper level of understanding about what's happening in the local tech ecosystem, to explore issues that are common to local tech firms. That's what we're doing today, by the way, all to help level up Ottawa's tech sector. Thank you for tuning in. If you're enjoying this podcast, please share it with a friend, expand our Techopia community. Okay, let's get down to business, and we've got a great show planned for you today. This is a discussion that will be of particular interest to the technology sector founders who think they need more capital to fund their growth. During the last federal election, a group of business leaders, most of them from right here in Ottawa, proposed a policy change that could radically alter the money available to growing tech firms. The idea is actually borrowed, we'll talk about that, from Canada's mining sector. It's been used since the 1950s, so it's a new application of an idea that exists in Canada, and it's today estimated that about 2/3 of all the money raised for mining exploration in Canada is thanks to this policy. Have you curious? Okay, I hope I do. We've got a perfect guest to explore this. He's been involved in Ottawa's tech sector for decades and decades. I think I knew him since the early 1990s or late 1990s, early 2000s. And I'm so happy to welcome him to the show right now. Here is David Perry. Hello, David.
Hello there, Michael. Thanks for having me.
I am so happy to have this discussion. You and I have been bumping into each other all over town, and you've been advocating this idea. So before we bring people up to speed, I want to make sure that everybody understands who you are, David. We've known each other, as I said, since the late 90s, early 2000s, in many different respects. I remember you from your CATA days. For example, your full-time gig, if I could put it that way, is CEO of Perry Martell International, where you help with lots of different types of talent recruitment. But tell our audience who you are, David.
I'm a recruiter with a business partner wife. We've been running Perry Martell since 1988, and we've done searches for tech, construction, and real estate on 5 continents for almost 40 years now. So that's what I do.
And you've been a keen observer of both the local tech sector, but also the national tech sector. And I guess one of the things you've identified, David, is that many companies, this is true to anyone that watches the show or reads OBJ, are often starving for cash. So you came across with some other people, and I want to hear the story, about an idea that you think should be applied to Canada's federal tax system. Tell us what this idea is.
So the idea is called flow-through shares. Flow-through shares has been at the back of my mind for 50 years because my uncle, Robert Joyce, was Pierre Trudeau's right-hand man in the finance sector, and then he was Jean Chrétien's right-hand man. And I was going to McGill and got fascinated by this whole concept of flow-through shares. So I've been studying it for 50 years. And this year, everything sort of came together at once. Thanks to President Trump, we now have an opportunity to dig into something that Canada invented 70 years ago and apply it to a new industry that's just going to explode, the tech industry. So it's not a new thing, as you said. It's been around for 70 years. We are just advocating allowing tech startups specifically to use flow-through shares to get a good kickstart and a good head start on their growth. And there's all kinds of examples that we can talk about here if you'd like to,
Cool.
from
Yeah. Well,
Australia and the UK.
yeah, let's stay on what it is for a second. So neither I nor you are tax lawyers or tax accountants, but let's take this like an inch deeper so that someone understands what a flow through share is. And you could either, give the mining example, David, or you could kind of imagine a beautiful future where this is applied to the tech sector, but help people understand what this idea is.
I'll use mining because it's really
Okay.
easy. Mining companies look for new opportunities, new gold, new critical minerals, whatever. And to do that, sometimes they raise money. Okay. And if they raise money, they have an opportunity to sell flow through shares, which means the company sells you the share. And when you buy it, they flow through the expenses of going out to dig that hole. Okay. So you get to write down your taxes. So, for example, you could, at 100%, which is possible, give $100,000 to a mining company, and you get to bring your tax level down $100,000. Now, if they find that new gold and your shares go up, which they will, then you're going to pay tax based on zero to whatever you sell it for. So the flow through is to flow through the expense, and the government doesn't get that tax money, but they get it on the back end. Does
You
that
That's
pretty
that's
clear?
well said. It's tax policy, right? So you can go really deep on this. But I think the takeaway is exactly what you said. In the mining sector, if they're looking to do some new exploration, a mining company can sell a flow through share. And in some circumstances, talk to our friends at EY, they're a sponsor of the show. If this circumstance pertains to you,
Mhm.
you can contribute, let's say 100,000 and almost get $100,000 tax credit. Plus, you're now an investor in a mine that could, you might find some gold or silver or critical minerals, and you might benefit. So it's kind of this really cool thing, right, David, where you can benefit on a tax credit side, but you also, are an invested equity partner in that case, and in the mine, I guess.
Yeah, exactly. And what it essentially does is the flow through shares de-risk the mining company going out and digging for that, or drilling for that new hole. We have the same in tech. We have the same risk. So what we've asked is, okay, R&D is risk. So let's use flow through shares to de-risk bringing new products to market, or in this case, startups going to market. And we're hoping it's going to be the exact same thing.
Now, you were working on this, David, as I indicated. This is a very made in Ottawa thing. I think a few people are from Kitchener Waterloo when I was looking up their bios last night. But you're part of a group of local, I'll call you business leaders, that identified this idea. And then and it's somewhat in response to Trump's presidency, but you pushed to get this into the Liberal election platform. Do I have that right?
Yes, it's myself, Paul Labarge, tax, Paul Brent, media, me, the idea, and some other stuff. And actually, we didn't focus on the Liberals. I
Okay.
wrote a letter to Prime Minister Trudeau and sent it December 5th, and the world came apart for him a couple weeks later. And the goal became, rather than trying to convince him to do this, is convinced all the parties, Liberal, Conservative, NDP, Green, Bloc Québécois, to do this. And the only party that responded were the Liberals.
Okay.
They put it in their platform, then they won, and now it's become part of the conversation. And Minister Solomon has now talked about it several times, and it's his job to bring this thing forward.
That's exciting. I mean, this is an idea that was born here in Ottawa, and I got your point. This was a nonpartisan idea, but the Liberals identified it, put it in their election platform. Um, I want to just talk about what you think at this point the impact of this could be. So we've talked about the mining sector. I think we've flashed on screen here that based on some preliminary research, about two-thirds of all of the money raised for mineral exploration is due to FTS. FTS is flow through shares. What do you and your colleagues at Canada Flow Through Shares believe the impact could be on local tech companies, Canadian tech companies? Tell us more.
Okay, so let me tell you what the real numbers are and where
Okay.
they come from. I went to the Canadian Mining Association. I've now done 2 articles for them, and the Prospectors Association, and I looked at what happened in the UK, and then I used the government's own model. So we expect that the first year we use flow through shares here in Canada, it'll have you'll see $500 million in private capital, no government money, private capital go into this scheme. And from there, because of the money multiplier, you'll see about $1.5 billion, $1.25 billion of productivity or money spent and products bought. And at the back end, the government is going to miss some of that money, but at the back end, the government always gets their tax. And at the back end of this 500 million, that becomes $1.25 billion. There's $375 million coming back to the federal government. And I've gone so far as a check, I sent you that report today, gone so far as a check and see what happened in the UK and what their experience was. It was stunning. So, I don't see why we can't expect a good first year. The first year for the what's called the Seed Enterprise Investment Scheme in the UK, which started in 2012. The first year was unknown. The first year they raised 97 million pounds. Okay, between the Enterprise Investment Scheme and the Seed Investment Scheme over the last 20 years, the numbers will astound you. 60 billion pounds raised, private. 400,000 new jobs, actually new careers, because these companies aren't going away. 80,000 patents, okay? And several $billion in revenue for the government. So the reason I think this is going to work well is because as soon as the leadership race started for the Liberals, I had a pretty good idea who some of the players were. And one of them happens to be Mark Carney, who's now our prime minister. Well, I went and read every single speech he gave while he was the governor of the Bank of England. And it was really clear in reading those speeches that he gets this. I mean, really gets this. And he was there when the Enterprise Investment Scheme was running and still is, and when the Seed Enterprise Investment Scheme was running in Britain. So he understands how this can work. He's seen the results, both by the economic side, but also by the people side. And their results have been outstanding, as I said. Nearly 50% of the UK's startup unicorns used one or both of these schemes. That's, so we're not inventing. Well, we invented it, but now we're going to follow this path. And I'm hoping that between us and the UK and Australia, we can take a look at all the hiccups that have come along and know what to expect and avoid them.
Okay. David, we're halfway through our discussion. I want to keep chatting with you about what this could mean for the local tech sector and what needs to come back in this, I'll call it a campaign. But before that, we do that, I want to pause for a second to recognize the sponsor of this episode. Thank you to Pearlie Robertson, Hill and McDougall. Tech companies move at the speed of light, and they need a law firm that moves just as fast. Pearlie Robertson, Hill and McDougall solves tech companies' most challenging legal matters. As Ottawa's largest independent full-service law firm, Pearlie Robertson, Hill and McDougall has provided specialized legal services for over half a century. Pearlie Robertson, Hill and McDougall advises tech companies in all legal matters important to fast-moving companies. That includes financing strategies, venture capital raises, private placements, public offerings, M&A, IP, shareholder agreements, stock options, and more. To learn more about Pearlie Robertson, Hill and McDougall, please visit perlaw.ca. All right, and we're back talking to David Perry from Canada Flow Through Shares, which is a grassroots groups that's advocating for some really important tax reforms. David, before the break, we were talking about how I think the stars could be aligning on this idea. You were just referring to how Prime Minister Carney was, of course, the governor of the Bank of Canada in England and would have seen this in action. So it's not just an idea, he would have seen its impact over there. When I think of the state of the local tech sector, David, especially from a funding perspective, I know Nick Queen from Invest Ottawa has been talking about this a lot. The concept of bootstrap capital, and we're calling ourselves bootstrap capital to some degree because there is a deficit, an absence of venture capital. Certainly, from the days when you and I first would have known each other, David, thinking back, and I know it was a very specific time in the tech ecosystem history, but when there were like $1 billion of venture capital available, sometime around 99 and 2000, that doesn't exist today, right? The companies that are embedded in Invest Ottawa and our universities or in Canada, for example, they don't have readily accessible venture capital. So walk us through what you think the impact might be. So if you're an embedded company, I said, Invest Ottawa, or let's say KNBA at Hub 350, and you're looking to raise money, kind of give us a little bit of a story, a picture of the future, how this might unfold for those tech sectors if flow through shares were enacted.
Well, I think when flow through shares are unlocked for
I like it.
the startups, the funding game, it changes overnight. And there's going to be more risk capital available. And when there's more risk capital flowing into early stage startups, founders are going to be able to bet bigger sooner. And that's what I think is going to happen in Ottawa. We're talking about a systemic shift. Founders are going to be able to hire people that they used to postpone hiring. Before FTS, most pre-revenue or early stage companies would have waited, in most cases, way too long to hire seasoned chief revenue officers or CFOs and product leads. Now they're going to be able to do that. Before, they didn't want to, burn equity or precious cash because it was like playing Russian roulette with their survival. Flow through shares is going to change that. The second thing is going to change, especially here in Ottawa, is when capital drops, risk appetite rises. So a lot of these startups will chase global footprints sooner rather than demand leaders, and they're going to start to demand, to hire leaders that have international experience. And it's going to be a case of changing, can we afford them, into can we win without them? And third, and most importantly for Ottawa, I think, is the technical hires are going to get much more specialized. And what I mean by that is, when funding is trickling in, I've seen this, companies hire generalists. When it's flowing, you build specialized pods, AI engineers, ML ops, regulatory compliance leads, the people who you couldn't afford to pay otherwise because they were going to squeeze you dry. So that's going to change how things are done here in Ottawa. And I'm hoping, having this conversation ahead of times, that some of the CEOs are going to understand some of the things that they can do to get ahead of this. And the simple things they can do is to start to map out with their HR or their strategy team who the next hires are going to be long before you get the check. And to do that, you probably want to engage with pointers early. I talk about pointers in the new book, but you want to engage with pointers early so that you're not the 15th or the 20th person trying to get hold of these people to ask them who the best people are to hire for. And it's going to help you because you're going to be able to design your offers for longevity. And what I mean by that is poor retention. If you spend a lot of money and people don't stay, you've just spent it for nothing. So you're going to be able to craft compensation packages that tie performance to real milestones. I mean, real milestones, not just paper valuations. And people have to start thinking about aggressive vesting and option pools and cultural alignment with people from day one. So that's what Ottawa can do, and that's what I hope they're going to do.
Absolutely. David, I said a few minutes ago, imagine if, and you corrected me saying when.
Oh, no, this is a win, pal.
So let's talk about the next step. So, this local group forms, you advocate for the idea in a nonpartisan way. The Liberals pick it up, put it into the policy election platform. What is the next step to make sure it's when? How does this get implemented? Tell us that next
That's a
step.
great question. And what it comes down to is there is no technology advocacy group in Canada anymore. When John Reed passed,
Mm.
and that's why Paul and I are doing this. When John Reed passed, that was it. There's no one that represents the tech industry. Mining's got 700,000 people. Automotive have got 400,000. We know how much advocacy they do. Tech has 1.8 million, and there's no one advocating. So we're going to continue to advocate. And the best way we know to do that is to get more and more signatures saying that this is a good idea. We're ready for it. And we're going to keep the canflowthrough.com website up, and we're just going to keep adding information. Over the summer, I will put up a CFO's guide using flow-through shares to raise, and I'll do a CEO's guide to hiring talent. And we're just going to keep driving people there. Wayne Gerbranson
Yes.
has agreed to do a national survey with us, part of the Brandon Group.
Nice.
To go out to all of the CEOs we can find in Canada to let them know this is happening, because while it's a great idea, very few people know anything about it.
Yep.
And that's what we have to do now. We have to make sure that people know, so they're asking the right questions.
Yeah. We should give another quick shout out to Peter Nicholson, by the way.
Oh,
So
absolutely.
if someone wants to know how flow through shares work, look up Peter Nicholson and his group. He's been using it in the mining sector for charitable purposes for lots of years, but he sees the impact because he's pooling some of that capital. David, I want to talk about the federal budget. So I think if we wanted this enacted as federal tax legislation, if that's the right term, we need this in the next federal budget. Is that part of your goal?
Yes, actually, Paul Labarge is retired and semi-retired and sitting at home right now, crafting the words for the policy. This is not his first kick at the can. It's not Terry Matthews' first kick at the can. What's new is we have a prime minister in Carney that actually understands how the financial markets work and how what you do on the front end, you can reap on the back end. And he's seen it. This is why I believe it's going to go through, and hopefully, not just for AI and biotech, but maybe in the first round, but get bigger and bigger and bigger, because this really does guarantee this guarantees Canada's sovereignty.
Yeah,
we'll keep the jobs here, we'll keep the IP and the money here, and we'll just keep growing.
Yeah, I love it. Listen, David, we've run out of time. This has been a great conversation. I really do help you sharing all of your expertise and explaining this idea and what comes next. But before we wrap up, it's time for our Building a Better Working World, brought to you by EY.
I am building a better working world by getting flow-through shares for technology into the budget and approved in the fall, so we can kickstart a brand new renaissance in tech.
As they say in the House of Commons, hear, hear. Or maybe that's the British House of Commons. I don't know. It probably happens on ours as well. Listen, David, give us the website again. So I heard you loud and clear that tech CEOs, tech founders, startups should go to your website and register their support for this. What's that website?
It's called CAN, so www.canflowthrough, FLOWTHROUGH.com. So canflowthrough.com, and you can leave us a text message. You can see all the supporters up the top. Leave us a text message or video, whatever you prefer. And after you do, post about it and ask 10 of your friends to do the exact same thing. Let's make this a
Viral.
a chain letter.
Yeah. Yeah. David, thank you very much again. This is the end of our discussion, but obviously an issue that we at OBJ and Techopia are going to keep on watching. Thanks for joining us, David. Appreciate your time here today.
My pleasure. Thank you, Michael.
All right. Cheerio. And they do say that in on the other side of the pond. Listen, before we wrap up, let's take a look at some of the other great companies that champion Techopia. Techopia is brought to you by many great sponsors, such as EY, Building a Better Working World; Perley Robertson Hill and McDougall, a leader in business and technology sector law; the University of Ottawa Faculty of Engineering, creating the next generation of technical talent. Techopia is not only a podcast, we post new articles daily at obj.ca/Techopia. And if you're on YouTube, please subscribe and click the bell icon. Okay, thanks again to David Perry and his colleagues at Canada Flow Through Shares Group. Keep on watching that. Go see the website. Listen, we're recording this in summer 2025. We have lots of big plans happening for fall 2025, including some invite-only events happening with our friends at EY. We're planning another magazine to come out this fall. And of course, day-to-day tech coverage. Visit obj.ca/Techopia. That's all the time we have for today. Thank you for watching and or listening. We hope Techopia is helping keep you connected and informed. Let's keep building Ottawa's technology utopia. That's what we call Techopia. See you soon. Bye-bye.